Ganesh, can I take you now to Kenya in particular? I mean, just get your view on a few things. We've obviously had an interesting set of dynamics. We've had the rate cap act. What, in your perspective, I've been following like private sector credit growth, according to the IMF, is actually negative for the first quarter. How has it played? How have things played out here? What's your read of the economy here?
I think the Kenyan economy, first of all, is not a single commodity dependent economy, unlike say a Nigeria or a Zambia or an Angola, which is either dependent on oil or mining. Or Kenya is pretty well diversified. So if you see even sort of over the last 5-7 years, the Kenyan sort of exchange rate has not fluctuated so widely as some of the other African markets.
What do you put that down to? Because
it's not a single commodity dependent economy.
Yeah.
That's primarily. And secondly, I guess you are a well diversified economy with no single sector, dominating. Like what happened say with Angola or Nigeria because of the oil prices started coming off and the exchange rates had pressures. The same in Zambia. With copper prices coming off, it goes with the copper price. So Kenyan economy that way has been relatively stable. I think it's very open economy. I think it's been growing double digits for the last few years, in that sense, close to double digit. It slowed down a bit. Again, the rate cap has had an impact, but to say that, take just one quarter data and think that it's had a significant impact, probably it's too early to call on that. And what people also need to remember is that last couple of years, with the lower commodity prices, the flow of credit, corporate credit, that has also come down.
Yes.
That's one reason as well. If a barrel of oil costed 100 earlier, now it costs only 50.
Yes.
The customer, if he is importing the same volume, he will require only 50.
Yeah.
So the flow of credit, the quantum of credit does come down with the lower commodity prices. So that's also one factor.
Yes.
And the other aspect is, in an election year, normally as it happens anywhere in Africa, there is a bit of slowdown. People want to wait and watch as to what's happening and what's likely to happen before they commit in terms of long-term, capital investment. But I would believe that, come last quarter, I think things will pick up again.
But we saw a little bit of acquisition activity, M&A activity. The Japanese company bought out one of the paint companies. It seemed internationally people are looking through the noise a little bit, was my impression, and thinking that they might pick up some cheap assets ahead of the election.
That's also there because the exchange is still quite stable, unlike some of the other markets where people were unwilling to commit because they didn't know where the exchange will settle.
Yeah.
In Kenya, the exchange rate has been quite stable, and consolidation is bound to happen because beyond a point, scale is important.
Yes.
If you have to compete, either you sort of compete on scale becomes very important, or you sell a niche product which has its demand, you can continue doing that. So consolidation will happen.